Hey folks, welcome to today's Steady Trader YouTube Live. Hope everyone is doing well. Every single time the stock market drops just a little bit, we get a lot of emails from people asking us about the price of gold. And that makes sense because a lot of people think there's a perfectly inverse correlation between the stock market dropping and gold prices thus rising. And for one, that's not true. But I want to make two very, very important points about gold that often aren't talked about. Now, there obviously are the so-called gold bugs out there who own gold for the long term, and I think it's actually a good idea to own some gold. It's not a recommendation, that's just what I believe is a good thing to do. But then there's a whole other side of gold where I think people have a misconception on it, and that's more sort of in the active investing and trading sphere. In particular, what we're talking about here is gold trading. Now, there may be some day trading strategies that people are applying somewhat successfully. Also, even there, I have my doubts that those are steadily successful strategies. But for the most part, there's two things about gold that I think from a near-term perspective are important to understand. Number one, it can be very, very choppy. The price of gold, as you'll see in just a minute, I'll show you a couple charts, can be extremely choppy. So if you're looking to trade gold, understand that the asset can remain very choppy for a very long time, like most assets, by the way, like most asset classes can be, but gold has a bit more of that tendency, at least has had so over the past few years. That's number one. And number two, it's easiest, in my opinion, to be very patient on gold and wait for some key points to be breached for momentum to start working. And that, again, that applies for most asset classes, but I think it applies even more so in gold. So let's look at it. Actually, it's one chart right now on gold to kind of hit this home so that you hopefully can start using gold in a more, in a less painful way, because a lot of people have had some bad experiences with gold, both in the long term and from a trading perspective, because they can't time it very well. So there's one way I'm going to show you right now that I do this, and I'll show you the line in the sand right now as well for the GLD ETF. So let's flip this thing around and look at the chart. So just so you know, what we're going to be looking at here is the GLD ETF. Okay, we're not going to look at gold futures or gold spot or something like that. And that's just because a lot of people are more familiar with this simple chart. I know there's the argument that the GLD is not backed by enough gold and blah, blah, blah. And that's not really the point of this video today, but I don't disagree with that statement, by the way, either. So let's have just a real quick look at gold. Again, this is the GLD ETF. Which represents the price of gold here through the lens of an ETF. What you can see, we had a very sharp rally, of course. All that ended, at least for right now, in 2011. We then started settling into well, we first corrected quite a bit, and then we started settling into a very, what I think at this point has turned out to be a very healthy consolidation phase. That's this area here. This consolidation phase, if you forget the initial drop for a minute and just look at the actual consolidation phase, which we could probably even say started probably closer to, let's say, July 2013. So that's now, as you can see, fairly long distance in terms of time that the price of gold has been consolidating. I don't know how many people have come across that said gold's a buy for years now and pretty much have all been dead wrong. That's why I'm saying gold is something to be more patient on. So if you like this, if you have any comments, please give us a thumbs up like or leave a comment down below. This is important. So the question is now, where does gold become interesting again? Now, listen, there are always going to be some trades to be had if you want to look at this from a near-term perspective. There's no doubt about it. And so there's no reason to confuse that with the more immediate or intermediate trend. But I think, and you can see this pretty simply, if we were to overcome the $130 area, again, on the GLD ETF, this is not gold futures, this is not gold spot, this is the GLD as a reference point, okay? I think this point here, as you can see, would probably be something that would be quite significant, because at that point also through the lens of technical analysis, the GLD would finally make a higher high, right? So far you can see we've been basically making lower highs barely, or at least been keeping the highs since 2014, 13 more or less, but we have failed to make a higher high. We've had some higher lows, for example, in 2016 and last year, but we haven't had any higher highs. The other thing about gold, folks, and this is really important to understand, is that, let me go here again, is that it's a trend following thing. So like oil, okay, a lot of these commodities, you have a lot of trend following folks that are going to jump on these trends once they breach certain barriers and they start gaining momentum. And gold, as I just showed you on this chart here, has yet to gain real momentum. So I think 130 is sort of the level here before potentially more trend followers will join the party. One last thing, yesterday we gave away two or three, I think, Profit Pro income system services for whole annual ones for people who sign up for the Arizona workshop. If you want to sign up for the Arizona workshop, go to thestudytrader.com, click on upcoming events, and you get to this page. Read all about it. Would love to have you there. It's a 2.5-day event. We can teach you all about income strategies and as well as capital appreciation strategies. So that's it, folks. Hope you have a great rest of the day. If you have any comments or questions, please leave them down below. Give us a thumbs up, like, and we'll see you in the next YouTube Live.